July on the Friday, and time now is 5:18 p.m. Alright, welcome to my daily trading analysis video. My name is Dylan. So, alright, so what has just happened just now is that the Bank of Japan, has finally released its monetary policy statement. I'm not going to talk about the details anyway, because I just want to talk about the movement that has just happened on some of the currency pair, and mainly I'll talk about the dollar against the Japanese yen. Alright, so before it happens, before they release the monetary policy meeting minutes, what happened is that the market has already started to swing. You can see that there's very big swings up and down within the range of about 150 pips. Yes, it's pretty crazy range. I mean 150 pips when the news is still not released. So a lot of things has been priced in, and the fact is that it has already been pricing when Abe announced about the possibility of additional monetary stimulus. So this is the what has happened when he said that. So market has pricing that. He came all the way down because eventually Kuroda said things like there won't be anything such as quiet helicopter money, which actually dampens the bets for additional stimulus and stuff like that, or the stimulus, the package of it is going to be too small to make any difference. So anyway, everything has happened. Okay, the minute is out, and the dollar against the Japanese yen went all the way down and got supported somewhere at the bottom of the falling trend channel that we can see right here. This channel, I don't think that it's going to be able to hold any longer, because you can see there's a lot of swings up and down, the sparking out up and downs of the falling trend channel itself. But what has just happened is that it came all the way down and it starts to make consolidation upwards. So I am expecting that the price may resume depreciation after the first downward, the wave itself. After consolidation, it may continue with the second wave of depreciation, not as fast as what we see here, but gradually it will start to depreciate, because I believe that the Japanese yen will still appreciate most of the time for the wrong reason. The thing is that after Bank of Japan has did some changes to its stimulus, the thing is that what else can they do? And that's probably why it reacted this way, even though they have additional stimulus. But it turned out to be that it's questionable that what else they can do. So it turned out to be, instead of weakening, it actually turned out to be an appreciation for the Japanese yen. Of course, the Bank of Japan can still do something even further, such as intervening in the markets, selling the yen and stuff like that. But anyway, for the short time being, we definitely can expect that the dollar against Japanese yen will continue to depreciate as the yen appreciate as a safe haven attack. So we have seen 1, 2. Okay, the retracement has gone for 2 small wave, and this will be a good time that the price may start to resume depreciation. So if you see that the price starts to go up a little bit again, resisted at the same previous high right here after 2 retracement, and it starts to come down, that could be a confirmation for you to go for the sell. And also bear in mind, this level itself is also a support term resistance level at 103.86. So I thought that that's a pretty good level to go for the sell again. Alright, if you have missed this wave or whatsoever, so that's the trading opportunity. We can look at it. Alright, the next big one that I want to talk about is the Aussie against the US dollar. Alright, everyone of us, if you have been reading the news, you should know that the Reserve Bank of Australia is most likely to cut interest rate in August. And when is that? That's next Tuesday. Very fast. Next Tuesday at 12:30 p.m. Singapore time plus 8 GMT. The Reserve Bank of Australia is going to release the cash rates. So most likely it will cut. Well, let me explain a little bit on that on the fundamental level. I have been saying a lot of times that 75 cents, 0.75 Aussie against US dollar is a uncomfortable level for the Reserve Bank of Australia. That is many months ago. Alright, this benchmark has probably come down after so many events has happened. Brazil and negative interest rate from the Bank of Japan, and some other where else is also going to cut interest rate this coming month, August. Not just Reserve Bank of Australia, Reserve Bank of New Zealand and Bank of England may also consider cutting rates. And Bank of Japan, they're going to expand their stimulus at the same time. So many things happening. It will cause the benchmark of the 75 cents to start to drop again. I'm guessing that it's probably about 73 cents. you know, or maybe at the most I give you 74 cents. So 75 cents could be the probably has turned into the trigger point. Remember before they actually cut interest rate the other time? No, just the month before, they were supposed, or rather the market is anticipating the cut, and it did not happen. What happened is that it caused the Aussie to appreciate, to strengthen again, which caused even more problem for the economy. So if next week they're not going to cut interest rate, what's going to happen to Aussie against US dollar? From 75 cents, if they do not cut, all right, I'll just give a possibility is that it could go all the way up to 76 cents easily, all right, and slowly it will just go beyond that. All right, if you look at the bigger picture, it can go all the way up back to 0.765, you know, and that is really even worse level. And if it breaks above, it's going to go beyond 77, 78, a level that they are really not comfortable with. And as I have said, the benchmark has most likely came down. Instead of 75 cents, 73 cents could be the uncomfortable level, and the trigger point could be right now. At the most, I give you 76 cents. That's going to be the trigger point. So I strongly believe that next week, Tuesday, 12:38 p.m. plus 8 GMT, they will cut interest rate. All right. So if that happens, what can we do right now? I do believe there will be many traders that's going to be focusing on this pair because of the cost cash rate next Tuesday. It's just going to be after today, next Monday and Tuesday. There will be dates. So you can see that right here we have appreciation, followed by a second wave, all right, and there is already signs of breaking below of the rising trend channel, a signal that the price may fall further. And just observe this resistance level, all right, 75.40, once, two, third, and the fourth time. So after, although it came all the way down, pushed all the way back, two times of retracement, it came down and it came back to the similar level, similar high, got resisted, and it has already started to fall. So the truth is that I have already shorted here. I posted on my Facebook page and stuff, and they can go and check it out. I've shorted, and I'm expecting to go down further eventually. Alright, because the expectation of the rate cut is really pretty strong this time now. Alright, so if you want to go for a sell for the Aussie against the US dollar, which is possible, go into the 15-minute charts. Right now you can see that it is already beginning to make small minor retracement. Usually I'll wait for a second wave. So say that if it completes right here, I'll just give you a quick tip right here. Alright, so just take note. Imagine if this is the wave, wait for it to retrace. I don't know where you go, maybe this, maybe here, I don't know, but let's take for example it completes here. Alright, you can go all the way maybe somewhere to this level. The best one to look for is that you plot your support resistance. This could be one, this could be another one. When it lands on one of the level, after two minor retracement has been completed, that is when you look for the sell. So I'm giving you another opportunity to re-enter this market in case you have missed it. Alright, so hope that this will help you, and this is all I'm going to talk about, you know, for today. Of course, if you're going to short it, okay, my expectation of how much it can fall, alright, simply I just make it second wave all the way down, and just so nice it landed at my key support level 73.27. So well, everything falls in place. There's also a rising trend line that's at this level. It shows that the whole wave, the second wave, can goes all the way up to here. There's a total of 200 to 200 pips of profits to be made. So I thought this is really a trade that we really don't want to miss. Alright, but of course that's provided then Tuesday the Reserve Bank of Australia cut interest rate. Alright, so that's for the Aussie against US dollar. But of course, another pair that you might want to be looking at to sell, it might be a little bit too late, is dollar franc. Because I think the franc will still continue to appreciate. There's so many issues with the yen. The appetite for the safe haven asset in terms of yen could have weakened a little bit, or the appetite itself has shifted back a little bit to Swiss franc. And we know that for US dollar, it's not going to appreciate at the time being, because they're still going to wait for more data, labor market, see how it goes, house inflation, before they can make any decision on the rate hike decision. You know what I mean? So before anything, nothing is going to happen to the US dollar, and Swiss franc is most likely to strengthen because of the amount of safe haven assets, and which is why I've shorted dollar against Swiss franc. It is still right now falling. So well, good for me again. All right, so for this pair, I'm just going to share with you what's most like what's going to happen. All right, and of course I'll be just looking at support level to see how far I can go. And of course I can always use the same method to measure the whole movement itself. If you look at the day charts, in fact the current price right now is a key level, and it has broken below. So the next level I can see is 0.6838. Still not really a lot, about 80 pips of profit to be made. I probably would advise you to stay away from this trade as of today, though it's Friday already. So this Monday itself, I'll see this chart again and see if there's anything I can share. But if not, that's all for today. So thank you for watching, and I will see you again next week.